Has refractive competition increased in 2024, particularly from J&J's Elita or Star Surgical?
We have not seen a significant increase in competition. While it is true that with J&J's Elita, a new system is arriving in some markets, it has not yet arrived in our main markets of China and the US. They do not yet have the approval for the Silk feature. Silk is the minimally invasive procedure that they want to attack the SMILE therapy with. I think it will be an uphill battle for them because SMILE has a very long safety track record due to our more than 10 years of having a first mover advantage. We've generated more than 10 million of cumulatively treated eyes, and it will be tough for the new Silk procedure to show a similar track record, leaving them with the only option to really compete, in my view, through price. They are so far trying that on a modest scale in some of the less critical Asian markets for us. We're seeing some presence, for example, in the Southeast Asian markets, not yet on a worrying scale for us. We're seeing some presence in India. But as I said, China is not yet in the focus and they don't yet have regulatory approval. We will see how long it takes for them to get there. And the US is also, they are also only restricted to LASIK by the current scope of their approval. And we are not seeing an FDA approval anytime soon. So this protects us for a little bit more. But we're also confident that with the upgrade of our installed base to the VisuMax 800, we can increase our technology lead also in these markets that I mentioned where J&J is already in the market. We have the better technology and the more modern platform as soon as we can get the VisuMax 800 out. It's already approved in most of these markets where J&J has recently entered. So we just need to do a good job in installing as many systems as quickly as we can to protect our market share. In terms of the competition with ICLs from Star Surgical, I would say there is a certain overlap, but ICLs have a specific use case for high myopia correction where sometimes LASIK or SMILE laser treatments are reaching some limits of what they can do and how effectively they can treat the patient's condition. And in those fields, we may not be able to effectively compete with the ICLs. On the other hand, ICLs are often not as good a choice for the more commonly observed intermediate corrections because they're more expensive, they're more invasive, the risk profile of the surgery is somewhat different. I think a good portfolio has both a refractive therapy solution and ICLs. So I can say this openly, ICLs are also interesting for Zeiss in the future. We have some know-how in-house how to do it. There are also some competitors who are looking at ICLs as an interesting growth option for them. So it will be exciting to see how this market develops in the next years. So far, I think competition with the Star is kind of the same as it has been for the last 2 years. In a certain niche, they are strong, but they're not across the board, I would say, threat for our very nicely positioned refractive laser business.
How is your US refractive business performing amid reports of soft demand?
It is correct, and I can confirm that US refractive demand has not been great. Procedures in 24 have declined versus the previous year. The reason is the high leverage and indebtedness in the private sector. Many households have struggled with the high interest rate environment in the US. And unlike many other Western markets, the US market is very debt and leverage driven in this area of private spending for refractive procedures. It is estimated that a majority, probably something around 2/3 of refractive procedures in the US market are being consumer financed. This is not the majority of cases, far below the majority of cases in Europe, for contrast. And in Asian countries, it's also relatively unlikely that refractive procedures are being financed by loans on the private level. So this represents a direct link to the macro factors that have characterized 2023 and the better part of 2024, with a turnaround in interest rates in the US that we've begun to see and towards the end of 2024. Maybe these conditions can improve and the US consumer, as the leverage wears off, can recover. I should say, however, that the US market still carries a lot of promise. The refractive rates are not high. They remain at 700,000 to 800,000 as per estimates by the US ophthalmology industry associations. And this represents a downturn of something like 30-40% versus the historical high watermarks out of the 2000 years leading up to the financial crisis. So even in its own history, the US market used to be bigger than it is today. We hope that with new technologies such as SMILE, we can broaden the appeal of refractive again and grow the market. And adverse conditions in the general market, like we're seeing right now with the high interest rates, can help trigger one or the other investment decision or investment renewal decision by customers, by surgeons who are looking, what can I do differently to attract more patients again? And I think investing in the Zeiss equipment, which is quite differentiated and can give you higher value technologies, can convince additional people to have refractive surgery who might be fearful of LASIK, for example, could be a good way for surgeons to position themselves in a difficult market environment. So I would not say that the macro conditions are something that needs to hold us back here over a prolonged period of time. We are hoping that the new VisuMax 800, the femtosecond laser platform that we are also expecting the FDA approval for within the business year 24-25, will give us additional momentum in this very important and long-term very promising market.
What's your outlook for U.S. equipment sales recovery after Q3 order trends?
In both Q3 and Q4 of 24-25, our US business clearly began to stabilize. The order entry trends have been improving. Our book-to-bill ratio in everything but the last months of fiscal year 23-24 was above 1 again. The last month typically has a delivery rush at the end of it, so this is not unusual to have a book-to-bill slightly below 1 in September in the last months of the fiscal year. But building up to that, we saw better order entries and more consistent order entries. And this is also confirmed again in the early days of fiscal year 24-25. So based on these early indicators, we're quite confident that the worst of the growth slump in the US is over. And I think now the question remains how fast the new products can kick in. Can we seek additional FDA approvals? Can we obtain additional FDA approvals, for example, for the VisuMax 800 femtosecond laser platform as we move on through the year around the half-year level? April, May means that for us in terms of our fiscal year. We would like to see the FDA approve the VisuMax 800 based on current expectations, but you never know, and there's always some residual uncertainty here around the timing. So will it be a growth year in the US? Likely, again, after the signs of stabilization that we've seen. How far it will grow will depend on some of these launch trajectories around the new products, but I'm confident we can return to growth.
Have you seen more competition or pricing pressure in US diagnostics?
In the US, the competitive environment for diagnostics on the equipment piece-by-piece basis has been quite tough for some years. One company that we've been struggling with here is our Japanese rival Topcon, who's been relatively price aggressive. But there are many companies who are often narrowly focused on 1 or 2 devices and not across the board on the 20 plus diagnostic devices that we have in our offering, for example. And therefore, the diagnostic imaging world is price competitive. The way we try to get out of this is by broadening the offering to include more software components, to educate patients and customers, of course, to think more holistically about platforms and architectures and what really is the setup they want to use, customers want to use for their clinics, rather than the individual price and use case of the single device, which may not be the best guide to improve productivity. Has the market become a bit tougher in 24? Probably the answer is yes, because there have been more constraints in the funding environment for many customers, leading to even more of a discount orientation than usual. It's a good news for us that in the summer of 2024, we have been able to relaunch our high-end optical coherence tomography model, OCT in short, Series 6000, which due to a registration being held up at the FDA had taken some time off the market until it could be relaunched with a newer software. We have that back in the market now, and it's already being well received. So if we have lost slight market share against Topcon during 23 and in early 24, we are now in the process of recovering that. And our position is pretty stable in the diagnostic imaging area, but it's still not as profitable as we would like it to be. And we are working hard on the cost base and on including more higher value elements such as software as discussed.
Disclaimer. As described in the legal section on our website, seat11a.com, this publication is for informational purposes only. This means it is not intended to provide you with any investment advice. Any opinion or recommendation expressed by the companies is neither given nor supported by us and should not be considered investment advice from our side. Also, remember that any opinion or recommendation expressed is subject to change without further notice. The content is obtained from sources believed to be reliable, but we do not guarantee its accuracy, completeness, or timeliness. Seat11a.com and its employees disclaim all liability for any loss that may arise in any form from any use of the information in the video, audio, and on our website. We neither express any opinion on the future value of any security or other investment vehicle, nor recommend any investment based on the information provided. Please consider the publications and our website as a platform for companies to present themselves. You need to seek financial advice from an expert regarding the accuracy and appropriateness of the material presented or recommended by the companies in the publication. As we are just considered a publisher, we may hold and trade securities in the presenting company, whether it is a listed or private company. By consuming our content, you agree to these terms and the terms in our legal section on our website.